All right, well, welcome everybody to the M21 trading system. And before we get going, we need to go through the legal stuff that we're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, the risk in trading options can be substantial, so please be aware of all your risks prior to placing any trades. The trades in the program are hypothetical computer-simulated trades, and although they are believed to be accurate, there is a chance that actual results may vary. So, just to start with, I'm just going to tell you a little bit about myself. I'm John Locke and president of Locke in Your Success, LLC. We started out as a success and small business coaching company back in 2004. And during that time, I did a lot of training in neuro-linguistic repatterning, neuro-linguistic programming, transformational coaching, and Ericksonian hypnosis. And I learned a lot about how people work and so forth, and that's been tremendously helpful in helping me help people create very, very strong changes in their lives. Now, as I started trading back in 2006, I quickly took my success principles from coaching and so forth, and I brought them into trading, and I quickly became very successful with trading, so successful that people in the options groups that I was a part of began to notice. They asked me to start coaching them, and here we are. We're talking about something called an M21, right? So it's come full circle, and we're pretty much mainly deal with traders now. We don't only deal with options traders, by the way. I also deal with directional traders, day traders, do a lot of trading psychology, and we set up all kinds of trading systems. So if you want to go into some other type of trading other than options, or if you want to do directional options, and we have whole bunch of systems for that as well. It's just I trade personally the options market neutral strategies, and mainly on the Russell. That's what I trade personally, but we have lots of strategies for all different things. So as far as the M21 goes, it's mainly the concept of planning positive theta trades around what you expect the market to do for the duration of your trade. So in order to do this, a lot of the course is going to center around technical analysis and identifying market conditions and then building plans around what the market's most likely to do. And we're trying to build these low-risk, high-return trades as much as possible. And to do that, we're going to carry out, for the mechanics, we're going to use the M3, the bearish butterfly, and the rock trading systems. Therefore, it's highly suggested that you know what the M3, bearish butterfly, and rock trading systems are. If you don't, then you can still get a lot out of this program. The technical analysis, the plan building, the risk control, the trading psychology, all that stuff is applicable to any kind of trading. You're just not going to understand the examples. So as with all these programs, there's going to be an awful lot of content here. First time through, it may be a little bit confusing. We're throwing a lot at you. And that being the case, you may have to watch it multiple times to get the most out of it. The examples are all going to be used on the Russell. Just to let you know, we can do this on the NDX, the SPX. Higher price stocks can all be this type of trading. You can do this type of trading. There's going to be differences in the mechanics of how you deal with it. In other words, the bearish butterfly with 50-point wings isn't going to work on the NDX. You have to widen the wings substantially. You have to make scaling points different. However, it is doable, and it can be done. However, the trading psychology, the technical analysis, the plan building is applicable to all, no matter how you do it. One note, if you do something like this on higher price stocks can move 50% overnight, and that's something you don't see out of an index. That being the case, you need extra protection and stuff, and we should talk about, one-on-one how to protect your position from a huge gap if we're going to do this, because we don't want to be losing that kind of money. So here is, as far as position size, the examples are going to be $50,000 position size. This doesn't imply that you should trade $50,000. I do this in all my videos because I want to show incremental adjustability within the positions. So I want to be able to pull off a butterfly and make a minor delta change. The reality is that you shouldn't be trading that size if you don't have the experience level and you don't have the net worth to do so. And we're going to be talking about that next, is how large you should be trading for your net worth. So if you want to trade this smaller, there's going to be a bonus section in this video, and it's also the bonus sections on the Rock trading program as well. incremental adjustability and capital control, where you can trade the system with as little as $5,000. And I always urge everybody to trade responsibly. I've had trouble with people trading too large, and therefore I put some maximum suggested limits in. And I would say that an experienced option trader who knows the system they're trading should stay around 20% of their net worth for planned capital. Or a planned risk of 3% of their net worth. So what that means is if you have $1 million net worth, everybody knows what net worth is, I assume? Yeah, okay. If you have $1 million net worth, my suggested planned capital maximum is $200,000, and there is an exception to that, and I'll talk about that. Or a planned risk of 3% of your net worth. That means you shouldn't be, if you're trading a bearish butterfly, you shouldn't be doing $200,000 position because your planned risk is more than 3% of your net worth. But if you're doing an M3, then certainly that would be fine. The only exception I have to this is if you go in and you use your trading profits to fund your account. So you come in, you have $1 million net worth, you trade with $200,000, and you end up making $100,000. Adding that, and that $100,000 you made, you're not using for income, you're not taking that out of your trading account. It doesn't matter if you lose it. You know, it's not going to affect your lifestyle. If you come in and you trade with $300,000 the next month, even though that's more than 20% of your net worth, I have no problem with that. However, if you're not making trading profits, why are you trading that big with yourself, right? So build up slowly. The biggest thing with options traders is they wipe themselves out before they get skilled, right? And we don't want to do that. We want to do that controlling our position size. And here is just some examples. And I was going to say, too, if you're a newer options trader, you should probably keep your maximum planned capital down somewhere around 5% of your net worth until you can prove that you can at least break even. So just an example, expert level complex options trader with $1 million, $200,000 planned capital, $30,000 maximum loss, planned loss on the trade. And if you're a newer system, you should lower that level. If you're a beginner with a $100,000 net worth, then we'll maybe looking at maybe a $5,000 planned capital and a $1,000 or less loss. If you don't have $5,000 to trade with, then we have other systems that we can bring and you can trade them. They're fairly simple to get up to that kind of money so that you can trade that. So as far as the M21, this is going to be a strategic trading system, which means we're not going to be putting on the same trade the same day of the month. Every month, we're not going to have the same, we're going to have different planned capital levels. We're going to have different maximum loss levels every month depending on what's going on. So it's not about being an average trader. It's not about being the guy that comes in and says, I'm going to do this condor and I'm going to adjust at this delta and do that, and I'm going to pay no attention to the market whatsoever. It's not about flying blind, it's about playing the wind and becoming a master at trading. And that's the level I want to bring you guys to. And that being the case, I just want to talk about the stages of becoming a master pretty much at anything, particularly complex options trading. You know, we all start as a novice. We don't know a lot about options. We come in and we start trading, which is a great thing. Trading's really good, but we don't really know what we're doing. We just kind of come in and we trade what we feel or what we hear on the internet. And there's a marvelous thing about that kind of trading. And the marvelous thing about that kind of trading is at least you're kind of being yourself. You know, you're trading to what you think, your feelings. If you're a kind of gambler type of person, you're trading one way. If you're a really conservative person, you're trading another way. And that's really good about people. The bad part is you don't know what you're doing, you're not planning, and that's bad. Eventually, when you're trading that way, you are going to take some fairly serious losses at some point, even if you're really lucky, because basically your results are luck-based. And you're going to go out and you're going to get some education. And you're going to meet these guys that are going to tell you, well, this is a vertical spread, and this is an iron condor, and this is a butterfly, and there's your risk, and all this other stuff. And you start doing this mechanical trading. And you start jumping, a lot of people start jumping around from one mechanical trading system to another or whatever. They don't really understand what they're doing. They're just trying to follow these rules that somebody put in front of them. This is as far as probably 90%, 95% of options traders ever get. And they're forever in this stage of doing this. And they tend to get stressed out because they're not trading to what they feel. They're not trading to their personality. And it's just usually a very stressful time. At some point, they get to the point where they start to realize that trading is not all about these rigid structures, right? Trading is about being fluid, trading your personality, knowing the market, and just kind of flowing. And you get into this flow state. And this is where we're trying to get you guys. We're trying to get you guys to a strategic master at options trading where you can identify your personalities, you can identify the market conditions, and then you can trade around that. All right, so that being the case, we should take a look at the success formula of masters. And this isn't just for trading, this is for every part of your life. Okay? And the first part is know your outcome. There's a lot of stuff going around about goals. Everybody tells you to set goals. Nobody ever tells you why. And the reality is that, you know, one of the things we talk about in NLP is that there's 400 billion bits of information coming at you at any given time. And the human mind cannot possibly process that kind of information. You could go completely insane at even a billion, right? As a matter of fact, what we can process is about 2,000 bits of information at a time. So that means out of 400 billion, you can pay attention to 2,000. That means your focus, whatever you focus on, and whatever you focus on is what that 2,000 bits is. So all this stuff's going on around you, and that's all you see. It's like looking through a dark warehouse with a pen flashlight, right? So we kind of compare this to the internet. You know, how much information is on the internet? There's infinite amount of information. You can have whatever you want. What you want to bring into your reality on the internet is you type something into the search engine. You type in, you know, poverty, for example, into the search engine. That's going to bring everything to you that leads to poverty, or all the information about poverty. If that's all you knew, if you came up to the computer and somebody else had put your focus on poverty, that's all you would know of your whole life, because you wouldn't be looking for anything else, and that's what comes to your screen. Where if you turn around and you punch in wealth or abundance, you're going to get everything on your screen that's going to lead you to wealth or abundance. And you're going to find stuff. All of a sudden, you'll just see stuff coming at you that's going to lead you to where you want to go. So the goals are important because they determine your focus, and your focus is important because you were paying attention to such a small amount of our world that we want to bring that into our world and into our trading so that we can get the results that we want. If you're not focused on the right thing, no matter how good of an options trader you are, or no matter how good of a plan maker you are, you're not going to get the results. So that's very, very important. The other thing we want to do is we want to take action. So when we know our goals, we want to take action with intention towards our goals. We want to create the proper plans. From there, bless you, we want to have situational awareness. So we're going to have these goals. We're going to make these plans. We're going to work our plan. And we're going to notice what's working and what's not. And from there, when we notice what's working, we want to make sure we exercise behavioral flexibility so that we change our approach. If you know your goal, if you want to drive your car to California, you know your goal, you run into a roadblock, you want to keep focused on that goal, you go around the roadblock and you go another way to the same goal, right? So you've got to have your goals, you've got to maintain your focus. And from there, we always want to operate from a psychology and physiology of excellence, which basically means we want to be focused on the right things, we want to have a good attitude. We also want to keep the proper body posture. Body posture is extremely important when it comes to your state. Now, your state when you're trading is extremely important. And you know, a lot of us get stressed sometimes looking at the screens. And what happens when you get stressed is your body kind of comes in and you start breathing up in your chest and you get all stressed out. And you can tell if I'm stressed out, or you can tell if I'm confident and loose, right? So that's all in your body language. Now, what people don't understand is, you know, your mind makes your body do this, but your body also makes your mind react differently. So if you turn around, if you're getting stressed out in front of the screen, or your focus is wrong, and you get up and you breathe deeply and you bring your shoulders back and you're like, yeah, all right, you know, you're going to come in and it's going to change your whole mindset. It'll change your focus. So you really need to have situational awareness when you're getting into these stressful events and be able to change your focus and change your body and thus change the way you're thinking so that you can get out of it. And then once you have that, you want to make sure you utilize anything and everything that happens to you to your advantage. whenever something happens to you, whether it's good or bad, you need to come down and you need to say, well, how can I use this to my advantage? So as this applies to the M21, when we're making trade plans, when we're making our goals, we're going to have this big overall goal structure, but every month we're actually going to have our own independent set of goals for the month. And that's going to be dependent on basically what the market's doing. So we're going to review the market prior to entering any trade, and we're going to make what I'm going to call a custom game plan for every month. And from there, we're just going to work our game plan, and we're going to go from there. So when I say take action with intention, I mean, what do you expect of the market? We're going to look at the market, and you need to ask yourself, you need to know what to expect of the market. You need to know when odds of trades working out are in your favor and when odds of trades working out are against you. You're going to look at the market at different times, and sometimes you're going to have a very good idea where the market's going to go. And you're going to see, and that presents an opportunity. If we have the Russell's been up 160 points in 60 days, that gives us an opportunity, all right? You may have lost the month before that because it went up so much. I don't know, but it's a definite opportunity for the following month, because if you go in back through history, Russell never moves more than 170 points in 60 days. It's never happened, right? That's an opportunity. It's an opportunity to take risk somewhere in order to make money somewhere else, and that's the type of thing that we're looking for. And there's other times when you're going to look at the market and you're going to say, you know what? I have absolutely no idea. I don't know what this is doing. I can't make any sense out of anything, in which case we're going to trade differently. We're going to trade more defensive. So you're either going to trade aggressively or defensive, and you can change depending on what the conditions are. One of the big things we have to remember with trading is ultimately we're going to be making all these plans and everything, and ultimately we have no control over where the market goes, and we have no way of knowing where the market goes, and we completely understand that. And because of that, our results when we're trading don't necessarily reflect whether we traded well or not. You can trade extremely poorly and have a very good result for the month. You can go in, you can take on way too much risk, and you can get lucky. The market will turn to you, and you'll get a good result. And that rewards you for doing something wrong. And we have to be very, very careful of that as traders, because we are rewarded for doing something wrong. That reinforces that behavior, and it makes us think we should do it again. On the flip side, we can do everything right and still come out with a loss and get punished for doing everything right. And when we get punished for doing everything right, we get a negative feedback for doing something the proper way, and that causes us to change what we're doing, and now we're no longer trading properly. Right? So we have to be very, very careful that our results do not necessarily reflect how we traded. What reflects how we traded is how well we planned and how well we followed our plan. And if you don't have a plan, then you did everything wrong as far as I'm concerned, because you're just doing stuff by chance and by feeling and by emotion. So we want to make sure that we're with that. And also, while we're trading, we want to know we're going to make these plans. And one of the things the plan does that we're going to make is it's going to help you decide when market conditions change. So we're going to set up a certain set of expectations for the market. And by having a plan and by having your expectations there, it doesn't mean that the market's going to do what you think it's going to do. But what it does mean is you're going to know when the market changes and does something you're not expecting it to do. And that's going to cause you to change plans early rather than waiting till you hit some sort of a delta adjustment point or something like that. Right? So having situational awareness is going to help us know, and having a plan is going to help us notice when those conditions change, and it's going to help us notice when things aren't acting the way that they should or the way they're expected. And another thing we should always notice too is our mindset. Our mindset is extremely important. I've seen so many good traders who lose money because they just don't have the right mindset. So once we find out that something's not going right, we want to make sure that we are willing to change our approach. It's the same way with directional trading. If you ever watch people who do directional trading, they change their opinion on a dime, right? They'll come in, they'll see the setup, oh, the market's going up. The market doesn't do what they expect it to do. Oh, the market's going down. They'll change on a dime. And you kind of have to be the same way. You're going to have these opinions set up in the market. When something changes, then you have to be ready to change your opinion and change your actions relatively quickly. And all this stuff should be within your plan, by the way. You should be able to say that these are my expectations now. If this happens, these are my new expectations. And that can be all within the change. And of course, you've got to be willing to make those changes when it comes. And attitude is everything. And this is a quote from my millionaire mentor, who has nothing to do with trading. He does small businesses. But he says, in life, we don't get what we want, we get what we expect. The reality is, and that's true to trading as well, the reality is most traders want to win. Matter of fact, I'd say all traders want to win. A very large majority of them expect to lose at some level. Even if they don't admit it to themselves, if they search their background, they expect to lose. That being the case, when you expect to lose, even though you want to win, you unconsciously do everything in your power to focus on and lose that trade. Now, that creates a situation where we're losing trades on purpose, and if we happen to win, it's because it was by accident. It was something we had no control over. And we don't want to be in that situation. We want to be on the other side of that coin. We want to be focused on the right things. We want to expect to win, and if we happen to lose, it's because something happened that was beyond our control that we couldn't predict. So that's why that's so important. And of course, utilize everything you can to your advantage. No matter what happens to me, I have this philosophy in life that no matter what happens, there's a way to use it to my advantage. And by doing that, it helps my mind focus on creative solutions so that I can make the best out of any situation. And a lot of times, I'll do better having that situation, because that situation happened, I'll usually end up coming out better than if it never happened at all. So that is very, very important. So one of the things we're going to be doing here, just shifting gears a little bit, is we're going to combine the benefits of directional trading with positive theta market neutral trading. And the goal is going to be to maximize profits when we have some idea of what's going on, and to minimize your risk when we don't. And some people will say, well, that's directional, and I'm going to tell you right now, we are not picking direction. We're setting up expectations. We're not picking direction. The stock does not have to go where you think it's going to go in order to win. In order to win the big money, it has to go where you think it's going to go. But in order to win the trade, it doesn't necessarily have to happen. So we're looking for opportunity in the markets. We're looking for situations where the price probably isn't going to go somewhere. And we're going to try and take advantage of that to put our risk there. And when we allow risk somewhere, it allows us to have more opportunity for profit somewhere else, and that's what we want to go for. So why do we do this? One of the things I ask when I get arguments about this is that, why do you look at market conditions? And I say, well, why does a winning professional sports team, do they play every game the same way? Right? And the answer to that is no. If you ever talk to any kind of coaches of any professional sports team, they go through great lengths to find out what's going to be happening. They want to know, who's the other team we're playing, how do they play, who are their good players, where are they placing them, are they going to be playing? They want to know the weather conditions. They go for hours and hours and hours of research in order to set up a game plan to take advantage of who they're playing. And we basically want to do the same thing when we're trading. We want to know basically three things. We want to know what environment are we entering into, what assets do we have or trades, and what's our mindset like. Right? Those are the three things that we're going to want to take into account. So what's happening in the market? Where are our support and resistance area? Is the market bullish? Is the market bearish? Are we in a choppy environment or relatively smooth? We have high implied volatility, low implied volatility. And we're looking for cycles and patterns within the market, what kind of cycles they're putting in, and whether or not that movement makes sense to us. And we're always looking for this type of thing before we enter a trade. We want to know what's happening. From there, you're going to set up your market expectations, and we're going to talk about what's my expected price movement for the duration of my trade. At what price points do I determine where the market is no longer acting as I initially expected it to, and what does that new information mean to me, and how am I going to deal with it? I also want to know what's going on in my head. one of the biggest losses I see, I do a lot of one-on-one coaching, and it's not just with market neutral traders, it's with directional traders, it's with swing traders, it's with investors, it's with small business owners, it's with people that need life coaching. Every field, it's all the same. We have this thing called emotional carryover, where you have an emotional reaction to one thing and then you bring it into the new situation. That's very, very common loss in trade, common cause of loss in trading. You have a month where you're all set, you're going along, you got this trade where you plan on taking this, I don't know, $5,000 loss, $10,000 loss, whatever it is, and you take that loss, maybe even a little bit bigger, maybe if it's not as big. But you take this loss, and that means something to you. And to a lot of us, the loss is more than the money. I have millionaires who lose $300 and they fall apart. It's not about the money, right? It's about, geez, I'm never going to make this work, I'm a loser, all that type of stuff, right? That's what the loss is about. But whether it's about the money or it's about your attitude, you carry that into the next trade, and you're not willing to let the trade draw down, right? You get in this situation where, well, geez, I lost $5,000 last month, I can't lose $5,000 this month. That is bad. In trading, you always have to be able to risk a certain amount of money in order to allow profits to build. That's the name of the game. That's the way that it works. If you're not willing to risk that, you're not going to win. So when they're not willing to risk that, as soon as this trade starts to draw down, they're freaking out. I get somebody I put into a trade and I say, okay, you're okay with losing $5,000, right? Oh yeah, that's not a problem. I get a call, they're down $300 and they're freaking out, right? No, right? That's not right. That's not the way to trade. You start doing that, you start over trading, and you end up taking a loss for no reason, right? Because you're just letting the market back and forth. You have to be aware of what's going on in your head, and you have to be willing to take that risk. If you're not, no matter what your financial situation is, you need to trade smaller or maybe even not trade at all, right? Because that is just part of the game. And if you want to play the game, that's part of it. So that should be, basically your emotional state should be taken into your trade plan. And not only when you create the trade plan initially, if you have this emotional state that you're just very tentative, then trade in a tentative manner on a trade that's not going to draw down very much. If you have an aggressive manner and you have confidence in what the market's doing, then you can kind of trade more aggressively. So just keep that in mind. All right, so you always want to know whether you're going to be aggressive or cautious for the month from both your technical analysis and your mindset analysis. And you always want to know under which scenarios you're willing to lose the trade. No matter what trade you enter, when you enter a trade, then you have an adjustment plan. Whether you know it or not, you're defining the situation. You're defining the conditions under which you're going to win and lose that trade. You are doing it. You might as well know what they are in advance, right? So I want to know what scenarios I'm willing to lose the trade under, and I want to know that in advance, and I want to design my trade around that. And I want to know how much I'm willing to lose on a particular trade. And from there, another question I always want to ask myself too is what strategy or combination of strategies best fit my current mindset and the expected market conditions. But basically, when you answer all these questions, you'll be able to build a winning game plan around your answers. So you're going to outline all the conditions. You're going to outline what's my expected price movement, under what conditions am I going to go for maximum gain, under what conditions am I going to let the trade lose. Yes, let the trade lose. Is that a new concept to people? Let the trade lose. There's conditions where you want to let the trade lose because the chances of it losing probably aren't very good, and you'll make a lot more money. Anyway, we're going to choose my planned capital, my profit target, and my acceptable loss numbers in various stages of the trade. One of the things when we trade this way, we're going to be utilizing the M3, the bearish butterfly, and the rock trades. I might have a profit target of 10% in certain areas, 20% in other areas, 50% in other areas, and my max loss might vary a little bit as well, depending on which configuration I'm in and so forth, because some configurations need to allow more drawdown in order to actually win. All right, so that is pretty much that. And I was just going to take just questions. Are there any questions about mindset and psychological stuff in general? Okay, so we're all good with that. All right, so why don't we take just a short break.